out because of the effects of all of this on your retirement savings. Joining us now is financial advisor Richard Rosso and good friend. Thank you for joining us.
Worst
Richard.
December since the Great Depression.
Oh my goodness, why is the market so negative?
It's throwing a hissy fit, as I call it. And the reason, part of it, is the fact that interest rates are going up. So when interest rates go up, that means less liquidity for stocks. In other words, years ago, the only place you had to go was stocks. Now, other investments are opening up. You're seeing bonds and other things that are paying interest, and money is flowing out. And also, we are starting to see a bit of softness in economic numbers that the market was definitely not expecting. And you got to remember, the market looks forward. So it's looking at next year being slower than this year.
Oh, wow. All right. The sell-off on Wall Street began on earnest Wednesday on the Federal Reserve. That's when they raised those interest
That's right.
rates. So the 9th rate hike since 2015. Why is that?
Well, you raise rates because the economy is supposedly getting overheated, right? So you put a brake on the economy. The ironic part is, well, is the economy that hot that you have to keep raising rates at this level? So the market is seeing something, obviously, that Mr. Powell isn't seeing. And it's trying to send the message, hey, if you keep going the way you are, you're going to push us into recession.
Wow, that's amazing. That's so interesting. And President Donald Trump is reportedly considering replacing the Federal Reserve Chairman, Jerome Powell. Does he have that legal authority? What effect would that have on the market?
He does, but let me tell you, I think that would create some panic because markets don't like change. So it understands Powell. He's pretty direct, and it'll deal with it. But if you go ahead and start moving things around or showing signs of distress or volatility, then that might be a really big issue.
Wow. All right. Big million-dollar question. What should people do?
Well, you had a million. I don't know what you have now. Well, the first thing you got to do is you got to really keep perspective that, guess what? Markets go up and down. So volatility is definitely going to be here to stay. As the Fed leaves, then volatility in your portfolio, you're going to get whipsawed all over the place. The question you need to ask yourself is, can you handle it?
Right.
Some people cannot handle it. We have a lot of people that have come into the market over the last 10 years. They've never been through a bear market before. They have no idea what it is. So those people really have to readjust. There's nothing wrong with taking some money and putting it into cash. You don't go ahead and sell everything, but you go ahead, listen, how much do I need to sell so that I can sleep better? Okay. Nobody should fault you for that at all. And again, you got to be careful because people say, well, diversification, I'm diversified. Well, guess what? That doesn't mean anything. And you know why? Because all stocks go in the same direction. If you're closer to retirement, then you need to be more conservative because eventually you're going to start taking money out. Now, you're accumulating money, right? Like you're going to retire. You're never going to retire. We're going to both be sitting here at 95. Hey, what's going on with the market? You can look at this as a way to buy lower, right? This is a good thing. So as you're accumulating, buying stocks at lower prices is not a bad thing.
All right. Richard Rosso, you got to check him out. He's amazing. Great friend to help you out.